Well, let's focus on another stock, Laurus Laboratories, well, to understand about what's the way ahead. We're joined by Dr. Chava, the founder and CEO of the company. Hi, sir. Good morning and good to see you. Well, there's been a rumor on the market for the last, 40 days or thereabouts, and you briefly spoke about it in your con call as well. The alternate API supplier for some new innovator. Could you tell us what is the timeline by which we could hear about this? Because the street believes it could either be Merck or MSD. Tell us more about that, about this opportunity. You briefly said, I think, that it was in initial stages. So timeline, and is it Merck?
We don't want to comment on the confidential projects for our partners. But we can tell you there is a definite shift from the big pharma and also large biotechs to diversify their supply base from one country to multiple locations. And we have seen that shift. And we have expanded capacities. We have expanded our technical capabilities as well. And we believe we have invested in capacity expansion at the right time. And we, as we mentioned in our con call, we are working with six out of the 10 big pharma. And we believe our CDMO will definitely will be a driving force for our growth medium to long term.
Right, Dr. Chava, we'll get to that. But, you also mentioned that you're looking at being the alternate API supplier to an innovator. And it's in initial phases. So just on this, by when could we hear about the outcome of this potential large-size deal that you could be bracing for?
We already supply 4 APIs for NCEs for various big pharmas. And this year is going to be a very remarkable year for us because there are 2 NDAs being filed using our API in the US. So once the NDA, the approval will be less than 12 months, then we will have commercial opportunities for 2 APIs. And there are multiple phase 3 projects under execution, and we believe we'll have a good times in the CDMO in the near future.
Mr. Chava, no, so this is not going to be transformative, right? I mean, this is something you already do. So there's going to be one more customer in that sense. Or without getting into anything, we said this is confidential, so we won't push you. But is this transformative in terms of the size of the opportunity?
Definitely, these are high-priced, large-volume products where NDA is being filed. These are not small. These are not in single-digit million. This is a multi-million-dollar opportunities we will capture once the NDA is filed, and then we start supplying the commercial volumes. And and also we have seen a lot of customer visits also happening. That is also an indication that big pharma and large biotechs are looking at diversifying their supply base.
Right, but so multi-million-dollar opportunity per year. So this is not small. I mean, that's how much you would tell us at this point. So maybe we'll have something definitive sooner. Now, the other thing is this news about the US FDA issuing an untitled letter. This is on the 16th of May for your manufacturing facility in Andhra Pradesh. So summarizing deviations from the GMP practices. The inspection happened in December, 4th through the 12th of December. Could you tell us the status of this? And with regards to the US FDA compliance, I mean, is this plant affected? What is the percentage of sales from this plant as a percentage of your US revenues?
We acquired a unit in 2020, which is called Phalanx Labs. When we acquired this site, already as an import element. So we took that facility and did remediation measures and used that for in-house intermediates. Based on the in-house intermediate usage, FDA inspected in December 2023. We responded to that. And FDA sent another correspondence in 16th of this month. Untitled letter as per FDA forum, a regulatory document, is a correspondence to the industry where the GMP deviation doesn't meet the threshold of a warning letter. This is a correspondence with us, gives us an opportunity to address the 2 more issues. So we had a 5.483 when FDA inspected. In the untitled letter, they only raised concern on the 2 points. We will address that. And this unit contributes less than 1% of our revenue. And also, this unit is not used for any of third-party regulatory sales. There are no DMFs filed from this unit so far. So this is, we believe this is, we are trying to resolve the issues of the import alert on that unit. And we don't see any impact on the corporate level.
Okay, fair enough. Mr. Chava, good morning. This is Sonia here. So you're saying this unit is about 1% of your overall business, so there's not really too much of an impact. So let's move on. I want to ask you about the CDMO business, because there are some concerns about delays in a couple of your critical CDMO projects, and your business was up only 4%. You saw growth of just 4% in the quarter gone by. Can you tell me what is the outlook? By when do you think you can get back to double-digit growth? And these, concerns about the delays in some of your projects, would you want to alleviate any of those concerns?
See, there is no delays in the projects. If you look at the drug discovery from phase 2 to phase 3 to NDA and all, it takes its own time. And that's the reason people who are in the CDMO business, they're fully aware. A CDMO business is very lumpy. So you can't measure the CDMO business quarter on quarter. But we know how many projects we're handling and what are the customers' interest in us, what kind of technology upgradations we have done. So we are very bullish on this segment.
Okay, so you're saying that the business is lumpy, right? So even if you look at it annually, I mean, you were sitting on about 2,100 crores in the CDMO business. That's come down to about 920 crores in this year, in FY24. So that is a significant fall. Going forward, what kind of growth can you look at in FY25? On an average, what are you looking at?
It's going to be significant growth in this year.
Okay, so when you say significant growth, what could it be? 15%, 20%? Let's look at it quarterly, right? I mean, quarterly you're doing about 200, 240 crores in the CDMO space. Can you take that up to 400, 450? Any indications?
We want to comment the CDMO business on the yearly basis. This last year, as you mentioned, we have made more than 900 crores. This year will be, we see significant growth. I will leave it that stage. Significant, you could guess. It is not teens. It is much higher than that.
Oh, okay. All right. So we'll take significant for that. But Dr. Chava, give us two numbers, and this is for the company on the whole, not talking about the segment. But so let's focus on that. Margins, in the last year, what was encouraging is that the margins steadily recovered all through the year. And the Q4 margins were much better than the Q1 margins. So that was good. So on the margins, when do you get to 20% margins? If you could give us a rough number that we should work with for FY25, that's point number one on margins. And debt is a little bit in excess of that 2,000 crores, but you're doing some capex as well. So you'll get the benefits in the coming years. What is the guidance on both these two? Margins as well as on debt. You could give us a range, sir, if you don't want to give us an exact number, but give us numbers.
We believe we will do, as we also mentioned in the con call, we hope to do 20% plus EBITDA margins this year. What we measure in our business is the gross margins. Are we doing better in our gross margin? Answer is yes, we're able to maintain around 50% gross margin for business. As we are not clocking revenue, our EBITDA margins coming under pressure. As we increase our revenues, things will be fall in place, and we believe this is the year where we will start improving our EBITDA margins. That is on the EBITDA margins.
On the debt, sir, you're going to give us debt. So margins for the year on average, it will be 20% as the gross margins are holding firm. So that's good. What about on the debt number from around this 2,300, 2,400 crores?
I think we will not increase the debt. I think, as we mentioned, we will not going to cross 2,500. And because we have done major capex already in the last 3 years, this year we do about 700-800 crore capex. That will come from internal. We don't need to raise any further debt this year.
So will it come down, but from this 2,500?
Will come down. Yeah.
In this year, by how much? In FY26, by how much?
We don't want to comment how much, but definitely it will come down.
So, and on top line, sir, what numbers should we sort of expect for FY25? What kind of growth from 5,000 odd crores?
We'll grow. That's what we stop giving the exact guidances. But this year will be definitely we'll see growth in all segments: generic APIs, formulations, oncology, CDMO. This year will be good for us.
Between 12 and 15% growth possible?
I'll not comment on that.
Because we have some numbers here, and the base range where expectations are between 57 and 5,800 crores. Would that be in the ballpark?
We don't want to comment, but as you mentioned, we'll have a significant growth this year. And all divisions are doing good.
This ARV business, the antiretroviral business, did quite well. The ARV formulations was up almost 25% year on year. Can you tell us in FY25 what kind of a sustainable growth do you see in ARV?
ARVs, we don't expect significant growth. We believe that will stagnate the current levels, but remaining segments are growing very good.
Okay, so why do you say you will stagnate? I mean, it's been a strong year for you, right, the last year. So what is the reason for ARV seeing stagnation in growth?
The number of new HIV patients being getting into the treatment is limited now.
Okay.
And there are less new infections. So the number of people on the treatment is not growing much. So the growth is also limited because of that.
Okay, just one quick word on Immuno Act. You have a 34% stake there. What is the plan going forward? Do you plan to raise your stake further? And, what is the contribution that you see from Immuno Act?
As of now, we don't have any plans to raise. They don't need money. They are well funded. We did 2 tranches and they started commercial supplies and they're doing good. They don't need more money.
Okay, Dr. Chava, you've given us a fair bit of detail and some color as well on the business. Final question before we let you go. A couple of years ago, to 2023, the guidance was around $1 billion, I think, in terms of revenues. And then things, they changed and you couldn't get there. If you have to hit that $1 billion of revenue, which year will it be? Will it be a story of FY27? Street has been waiting for the last couple of years, actually, and got very excited. But then that guidance started getting, pulled back and the goalposts moved as well. So by when? 27, 26?
I think now for us, we have to demonstrate by numbers, not by saying any targets now.
But you must be having an aspiration, sir.
Yeah,
you must be having an aspiration.
We have aspirations, but our aspirations are big. But we will show those in delivering numbers.
That's
better way to do it.
That's a better way to do it. Mr. Chava, we appreciate it. Thank you very much. But I think you gave us a sense and you're sounding confident without putting exact numbers there, which you have done in the past and for whatever reason. So yeah, I mean, do it and then say it. 20% margins though, 20% plus margins compared to the 15.5 that you did in FY24. That's looking very healthy. So we look forward to speaking with you again, sir. Thank you very much for that conversation and good luck.